This is Eric Muadhi, themuadhi.com. After the close. Sep Let's try this again. This is Eric Muadhi, themuadhi.com. April 5th, after the close, on what was shaping out to be a very disastrous day for the market. But one thing is becoming very obvious, and it's a true characteristic of a market trend that seems to be changing. The main characteristic of a bear market is that more than often the close tends to be nasty, and the main characteristic of a bull market is you usually tend to get this stronger than usual close. So we seem to be changing the way the market closes. If you compare this to the market close most of last year, the closes were usually very nasty. So today was an opportunity for the market to totally break down, but by the end of the day it managed to really recover most of the losses for the day. And actually I think the Nasdaq closed at the highs. After gapping down lower, it closed at the highs for the session intraday, even though it did not close positive. So that's a good sign. If you take a look at the diamonds, what was shaping out and what is shaping out now, if you look, especially we are still stuck in this upward sloping channel right here. We haven't broken below this, so the market, we can say this rally seems to be still intact. We are all expecting a pullback at some point, but the market is saying probably not in a hurry. What we are forming here is a triple top on the RSI. Now, early in the day, this RSI was actually looking like that. It was a confirmed triple top on the RSI. As of the close, we see that what the market has done is now we have this support. So what it looks like to me is that the market has a fabulous opportunity. If it wants to take it, the market has a fabulous opportunity to actually break out, and that's going to be a significant breakout given that this was already confirmed resistance area. Okay, so if we get a breakout here, it's going to be after the recent consolidation, you can say a different gear in the recent rally. If you take a look at the EWZ, which is a Brazilian iShares market, this being a 6-month hourly chart, this area here, the shaded dark black area here, was resistance going back to November. Now we broke about that, above this level, I would say what, two trading sessions ago, and we've since remained above this level. So this breakout on the EWZ remains intact, which means the market is, again, I'm just showing you an example where the market is not totally breaking down. There seems to be constructive base construction after the recent run. So we still remain above these levels here, and you're going to see this in many charts. What happened today is you'll notice that the Nasdaq, if you take recent daily closing high, we had moved below these highs for a while, so we broke above that level, and intraday we had moved below, but we closed above this line. So the market is finding support on critical levels. So as long as we are not breaking down either recent breakout levels or breaking the upward sloping channel that the market has been building, and you'll see this on the daily chart, as long as we haven't broken down, then the bulls continue being in control. If you take a look at the Hang Seng, the Hong Kong market, and this is a 2-year daily chart, what I was discussing on Twitter is here in this market we had seemingly a double top going into late last week, and with the action overnight, they managed to actually break this, and I'm going to zoom in. They managed to break this double support and break out. So we see more than one market worldwide showing us that it can actually break current RSI resistance levels, and that might be the reason why even our markets are trying to play catch up by not breaking down. So there's a lot of strength internally within the market, and probably we might continue seeing consolidation or sideways action, or even the market continuing its recent rally. The best thing would be to find stocks that have been basing and breaking out of bases at least 2 day after a 2-day rest period. That would be the best way to play it. Don't chase stocks that have not pulled back. You want to play either stocks that did not participate in the recent rally, and you also might consider playing stocks that have based for at least 2 rest days. If you take a look at GDP, this is double long gold, and this is a all data weekly chart. You see that after we had this nice uptick on the weekly time frame on gold, we recently broke down here, and so this is going to be week number 3, week 1, week 2, week 3 of a break. And this break is actually disastrous because it looks like we might be seeing lower prices in gold over many months. And maybe that money that is leaving gold is the one that is putting some kind of a bid on the stock market. So the rally remains intact, was breaking down today. Some of the market managed to save itself. Let's see how it shakes. We have an opportunity to break out on the daily charts, maybe tomorrow or sometime this week, or maybe we might just stall and confirm resistance. Eric Muathe, themuathe.com. Peace and blessings to you.